Good morning. Well, let's wait till some more people join. Yo, welcome to the stream. Let's zoom out. Welcome everyone in the chat. I see quite a lot of new names, which is good to see. Let's give it 2 more minutes and then I'm gonna join so more people can enter. Welcome everyone. Good to see a lot of faces. We have some interesting price action ahead of FOMC because we are sellers stepping in and we are failing local demand. So this could be the start. However, let's see what the value area high is right now. Yeah, with this here. So super interesting. Abby from Discord. Good to see you. And Arno as well. Same people are in chat again. So let me just start and then all the people will join in later. We have this range, which is super similar as we had here, where we have the tab 1, tab 2, tab 1, tab 2, and now tab 3 with that potential bearish PO3 idea. However, right here we can see the moment price fell in the value area high was right here. So you can see that from here basically your deviation was in because you came back into your second tab, so in your range. But your value area high is the more important level. And you can see that once price lost the value area high, that it was basically acceleration directly to the value area low. And from there, further down. So currently, if we watch where the value area high is, then price is now accepting back in the range, which is a warning sign. But we have the value area high resting right here. So there is a good case that this is a bearish PO3 as well. And we can see what price leaves behind because we tapped into this 12-hour supply, as you can see. So this is basically a supply mitigation. Could be our third tap right there. And then we can watch what is our most important structure. Going into the third tap. That is basically the 2-hour structure right here, which has broken back to bearish right now. So we have candle close. So that is a signal that there's a big chance that this is our high, in which statistics are also pointing to that right now. Because first our weekly low was on Monday. And then we had weekly low at Monday, a weekly high at Tuesday. However, right now we took out the weekly low. And it means that this is our weekly P1. And our current low is the weekly P2. Which means that the stats have flipped. And that therefore this is now a strong high. And this is a strong low. A weak low. Sorry. So right now, my first idea was that we would take out this high maybe one more time, as long as we would hold the demand right here. However, we are now failing demand and creating supply and breaking structure. So that means that we, or at least I have to just adapt to what we have. And then we can look at structure low high breakdown. So this is like the more broad range supply. Range supply. And then I can already see that we have like 2 hour, it's that block right there. Let's see on the 15. And then more refined is like here. This is supply as well. So then we can also pull like a volume profile from this high to like the breakdown point. And then the point of control is the level right here. So that's like your optimal reversal level. So let's mark that out. Put an alert. Oh, let's put an alert right there. That's our current weekly high. And then watch what we have below. Do we have demand or anything resting a little lower right here? So this is weekend. This is, what is it? This is weekend liquidity. That was already mitigated. Yeah. So highest probability outcome right now is to see a lower high and then a move back in the range. And the moment we fall back in the value area high right here, then it's almost a exactly replica of the last time. And it means that you don't get any good bounces, but that any bounce is likely a good short. Also because we deviated above this VWAP, above and now below, which means that this is highly likely a deviation, and you now get that acceleration lower. So can have a look at, I'm gonna put an alert more already here, because price is already also creating some imbalances showing seller strength. We can also see that with our red candles most likely. Okay, this is important. On the 3 hour we have an OBIM right above the value area high. Let's put that on. So here you see this is last candle before the green vector candles started. So that's demand. It's right there. This is range supply. This is range pivot supply. This is demand. So for bulls, this is absolute key. This is last demand and the value area high. If it falls below here, then any bounce is for shorting. Although right now I would also expect that a bounce is also for shorting. And then from here, you basically only have sell side liquidity. So you have all these lows right here stacking up. And then from here, so the moment you start taking out the first lows, then it's probably gonna accelerate to the downside. However, we are ahead of FOMC, so the market loves to trap a lot of people. So we just had a lot of longs getting wiped out, but also quite a lot of shorts stepped out already. Let's see if we have more local levels. So basically this whole zone is demand, but we have some more demand here. And let's see, good morning. Good Bink, good to see you as well. And let's see, can't we draw range from second tap? Which range are you talking about? Oh, the high time frame range probably. From this high, you mean? Or from that high? Yeah, you can draw. Everyone should draw their range like they want. But to me, this is the valid one. Because you're turning down, so range low, range high. This is step 1, this is step 2, this is step 3. The high time frame range. You can watch this as your more low time frame range. But high time frame is more important to me. Does anyone know what's the CME gap where we have? I believe we have it around here. So if we clear the CME gap, but we hold the value area high and this demand, then I'm also interested in longs down here. And I might be interested in longs anyway, but right now price is going too vertically down. So then I never look for longs. But if we hold around here, and let's say sweep and then break structure, then I would look for longs as an hedge and then shorts from this zone. If we fall below here, then literally any bounce, I would look for shorts. Then if we look at, let's look at quickly what is happening here. Welcome Fuji to the stream as well. Fuji, do you know where the CME gap is? When is it closed? So we are nearing some with a POC at 71.5. Yeah, so that's around here. 51. It's like a daily POC. Give me a sec. Yeah, I was watching. I will go over hype in a minute. But they had an announcement that they will have the S&P 500 will be tradable on hype 24/7. So that's why we spiked higher. But I believe the CME gap is getting filled anywhere right here. We have a daily demand, we have the value area high, and we have 3-hour demand right here. So this is a do or die zone, which is always a level where I'm interested in longs, because either you hold here or you just it's like truly bearish. But right now there is no structure. Let's see what he can put an alert here. And I don't like to trade ahead of FOMC, but normally my idea would be to look for triggers here. Longs from here, shorts from here. And if we fall below this demand, then only interested in shorts, either from here or on any bounce, and then look for shorts. But for now, this is super clean supply for lower high because we broke 2-hour back to bearish. But this is also key demand. It's a bit of structure against the range value area high. Around 70.9. Okay, a bit deeper. It's below the value area high. 71,300. Yeah, so around these levels, which is the daily POC right here, and also the range value area high right here. So definitely an interesting level. However, right now how it looks is super familiar with this range right here, where I believe that back then we had the high at Wednesday. Right now we have it on Tuesday. But I can show the weekly stats because we made a new low, which means that our high is now the P1. And then on time statistics, you can already see that 12% of the weeks took out to the weekly high. So that's low. And then based on distance, like 40%. So distance is not telling too much, but in general, if you have your high on Tuesday, or at least your P1 on Tuesday and your P2 on Wednesday, then the Wednesday is the much lower probability. And then we can see that 86% of the weeks form a new P2 after Wednesday and 88% of the weeks move further. So if this is our weekly high, then there's definitely a lot more downside ahead, and especially if we look at the sell side below. However, for me, this is not an area to go short. I want to short from here, or if we lose this level, and then any bounces. Yeah, let me look at the ticker. What's the BTC1? Fuck. But there are a lot of gaps. I don't think this is the good one. BTC1. BTC1. Or it should be on the daily, maybe. Oh, look. I have no idea if this is the right one. But here, if I look locally, then it's from... Here, the price is a totally different price as well. No, I have no idea. This doesn't look like the right chart to me. But at least the weekly stats have flipped bearish, so we have to be prepared that this is our high. So that means that any bounce close to there can be for shorting. For now, it looks like pretty bearish because we broke structure back to bearish on the 2-hour. So then I just have to adapt and then look for shorts here or over loss of that level. Let's look at the hype, because yesterday we discussed hype. And there we had this beautiful model 1. So 1, 2, 3. With a local bus. It was on the low time frame. With the bus right here. And then I was looking for it to complete the model 1 and mitigate this range demand. So price tapped into that range demand, and that was where I was looking for a accumulation. However, price is, it was like so bullish that the only purpose of that distribution was to mitigate this demand, and from there it basically vertically went up again and made new highs. So super clean example of a distribution that had the intention to mitigate range demand and then push higher. And then this morning in the server, I also mentioned that like there was a sign of 1, 2, 3, a new model 1, but it was to me a bit too vertical. So it could be just a higher low for a higher high, or in this case, a sweep and then higher. So I was doubting, like, should I take this short or not? But given the fact that we mitigated this demand so quickly, so definitely buyers in control, and at like more vertical, I decided not to short it, which in the end was a wise decision. However, it could have been a short because we had like a clean breaker structure right here. Then price came back for the extreme supply. See. right there. Supply. And then even here, I believe, yeah, like, so right here you can see you have wicks all over the place. So you have wick 1, wick 2, wick 3. So this is basically also showing exhaustion. Then you broke structure back to bearish right here at a retrace into your extreme supply and broke your internal back to bearish right here. So right here you could have taken a short or after the bulls or on the retrace right there and then use this as your stop loss. And then it could have been a super nice runner already to like to here for like a 5R. So I was analyzing the chart when I saw it go down and then I was like, to be honest, this would have been worth the shot because you have signs of distribution. There is nothing above here to take. So it could have been a runner and then all the way to your range low, it would have been almost a 10R. But then I got the alert. So I was thought, okay, either it hit the range low or it did something crazy. And then it turned out to have made new highs. So in the end, good decision to not take the short or take the short and then de-risk it and take profits on the way down. That would have been the best idea. But right now it might be finally time to short it because we had a news event and that's often like a classic sell news. So, however, this is not a setup I would trade at all. Let's see. Price is creating a super deep wick, so oftentimes you at least fill that for 50%. But if we look at it from maybe this as range, then if it gives a, here we have some supply. Maybe if it comes into that supply that I'm interested in shorting it. But yeah, this is not a chart I would usually, with those deep wicks, it's dangerous to trade. But yeah, oftentimes you at least fill it for 50% and then continue down. But it's typically for market that it throws like Wyckoff after Wyckoff after Wyckoff. Because insiders knew that that big news event would be released. So it's just manipulation at its finest. And right now the news is behind us, so the big players probably want to get out, which is what they were doing already here. And right now the event's over, so I wouldn't be surprised if this is our top for the time being, and that we're gonna retrace some levels because the big players have used the hype, and will now you will now see everywhere how amazing Hyperliquid is, and I don't know. While the big boys are now only thinking, how can I get out of my position? Because there's no narrative anymore. So we'll keep a close eye on it, but mainly for shorts from now on. What's BTC doing? Selling off further. Where can I find these data? I think you mean this data. This is brighter data, which is a analytical dashboard where you can see time and distance statistics, and it's really helpful to determine which highs and lows are likely to hold based on the week or the day or the session. Right now we have a strong weekly high and a weak weekly low, so quite a big chance that we will see lower prices during the rest of the week based on that. And then you can combine it as well with, like now we have a strong weekly high, which is also potentially the third tap of this distribution range. We broke 2 hour back to bearish. So if you're looking for shorts, this is now a super clean invalidation to use. You have to put BTC futures on extended hours. Let's see. I've never really traded with BTC futures, with CME gaps. So let's see, where is that? Yeah, you can. Is this? Yeah, still gaps everywhere. Well, I've never really traded using CME gaps, so I really don't care a lot. Then Tau, potential the second tap right here, but the move into the second tap is pretty aggressive. So I'm looking at the next demand, and we have to keep an eye on BTC, which is now showing a lot of bearish signals. So then if this starts breaking below the range, then this could also just be a BART and then retrace a good part of that uptrend. So being really cautious with longs on altcoins, maybe even more interesting shorts in case BTC completes the distribution, because then there is a lot of downside, like a lot. Because the technical target is 60k, and this liquidity trail is the most important one, which is all the way to 62. For ETH is like more interesting because while BTC is staying within the deviation threshold, like BTC could go all the way to 78 to stay within the deviation threshold. While ETH, if we look at the taps, ETH broke out of the deviation threshold, which was here. Let's see on the, yeah, we have daily closes above. We have 3. Yeah, we even have 3 daily closes above. So BTC could very well be a bearish period 3, but technically, if we ignore BTC, and ETH is oftentimes just the bitch of BTC, so if BTC shits the bed, ETH likely does this as well. But technically, this is now a range breakout, could be a retest before continuation, aka RIMC. Also, if you look at the value area high right here, on ETH it's located much higher. And there's some demand zones. So if this would have been BTC, then I would have been much more bullish right now. However, I know that BTC is the king, so if BTC shits the bed, ETH will follow it directly. However, purely based on the chart, this could be, it's bullish until proven otherwise. Let's see what the, like this is hourly structure, which is technically not broken yet because we wicked it. So then the next, but it looks to be, will be broken. And 2 hour is, there's no 2 hour structure. But it can turn into a really awkward deviation. But that's why I prefer to always, like 90% of my time, I'm watching BTC. Because these all the other coins are just following it, but then in their own. So the last level to hold price up is basically this range high demand, which is demand on the 45 right there. Maybe here, but from here there is only sell side liquidity. So the moment you fall below here, it's probably a snowball effect towards all that sell side liquidity. So an interesting chart, because technically this can be just a mitigation continuation, but yeah, this also looks like a very good rounded top. So definitely interesting to watch. And also because BTC is at a key level. Like this is the last level of support for the bulls to hold with the demand daily point of control, CME gap around here, any value area high. It's could still reverse from here, but yeah, this is the level you need to get above for continuation, because for now it's more likely to lower high and then break and then lower low and then continue much lower. However, a lot of different options right now. And like I've been talking about this 1, 2, 3 drive since 2 weeks back when we made this deviation. However, last week it feels like everyone is expecting the bearish outcome, and everyone is saying everyone expects the bullish outcome. But the only things I see is that everyone is expecting the bearish outcome. I was like, how many people are? It seems like everyone is prepared for the bearish idea, and that nobody is prepared for another drive higher. That's why I was thinking, like, I would not be surprised to see price make new highs and then have that bigger distribution and then push lower. However, opinions are worth nothing, so have to be ready to adopt. But I wouldn't be surprised if we get a bounce from around here. So I would be interested in potential longs. However, I never like to enter here, for example, and then I want some structure. And right now, there's nothing. The danger of this is that you enter and that it's just a slow bleed lower. So it's always better to wait for at least a break and then enter. And then enter hedge longs for shorts here. But if you don't get a short here, then you can just let them run. And if we confidently break below 71, then shorts are the only way. Probably if we break below here, then you're not gonna get the obvious retrace, but likely shallow, like range high and then break lower. Similar as what we had last times. I also see only bearish views on my timeline. I guess we will see next. Yeah, like the thing is, everyone says that everyone is bullish right now, and that therefore it is bearish. But I almost see nobody that is for the bullish idea. It feels super crowded that the bearish idea will play out, which pure on the chart is the most logical. However, I've been too long in crypto to know that if everyone is expecting the same, that it goes higher and that then literally everyone gets fucked over. Because the moment this now pushes higher, nobody's prepared for that. And then people are not ready to adapt. And then they will short every move, every move they're gonna short. And then eventually when they think it's gonna reverse here, then it's going down. So just purely based on sentiment and a little bit of gut feeling, I still think we could go higher. But technicals always lead. However, I also learned to trust my gut. And I know that people often it's easy to say we go for the crowded idea just to pleasure people. But I've done it a lot in the past, and then eventually you'll find out that you are talking to please other people and not be true to yourself. And then, yeah, that's not what you should do. So I am still thinking that we might get a move back up, but will all depend on just triggers. Also now I don't have a active position running, so I also don't really care. But main idea it is that we have FOMC, so then I also don't like to position myself. But any longs from this zone can be used as hedges, and then you can see if you take a long, for example, here, and you get that reaction. Let's say you give it room, enter anywhere here to there, and you indeed get that move. Then you can watch here what happens. If you see weakness, then you can close it and potentially, or you hedge yourself and get in a short. And if you get it push up, it's likely if we get here, it's gonna shoot higher. Then you can let it run and don't get into short. For now, it's definitely showing a lot of weakness. Let's quickly look at and look like the daily POCs, they act as magnets. So price likes to travel to them, but they are also supports. So we have just taken out the first one, and we have one right there and one right there at 70k. So what would be the ultimate trap maybe? It's like last level is 70k. Right there, this one has been taken out. I'm just thinking out loud right now. But what is our structure? So internal 8-hour structure is right there. It's also 6-hour. It's also 4-hour. Also 3-hour. So the structure up until 3-hour is low, high, high, low, higher, high, higher, low, higher, high. So from 3-hour and above, this is the market structure low. Let's make that market structure low, which is also a daily point of control. So 3-hour and above is bullish till 70k, let's say, which is also near the value area high of the range. And then below that, we broke structure back to bearish right here already. But what will be maybe max victory is to get here, make everyone go short super hard, then go up, and then distribute. Let's see how that would how it would look. So technically that could work. Yeah, it's dangerous because there are so many outcomes. Also, all this liquidity resting below. Yeah, it's hard to say, hard to say, hard to say. A lot of different outcomes. It looks pretty bearish, but where's the chart? a lot of outcomes. I'm gonna be interested in longs down here, shorts down there. And I was looking for that bearish period 3 idea. However, for me, there was no short to be taken here, for my system at least. You can take like a short here and then based on the high holding, but I want like local distributions or Wyckoff models, and there was not really any clean one in here. Like yesterday we had the 1, 2, 3 drive and then a push higher, but from here we didn't have really any distribution models, so could not take the short. So for now, if we get moved back into these levels, then I'm gonna look for shorts. But else, there will always be new opportunities. Because if we look at the former range right here, then also here you get like super aggressive break, and we never retested this level. So also on BTC, if this is the break, then we're unlikely to take out the or retest the obvious level, because everyone wants that obvious level. Let's see. But there we add also like if you locally, and then this is the break, so that's basically your confirmation below your value area high. And here you get local redistributions. So then your main attention should be on, okay, any local distribution that I get, I want to short. And if you get like your internal confirmation, you can use the redistribution as your invalidation. And then often you get even a better risk to reward than having the ultimate top. So this looks really similar, where this was the weekly high. Then you basically had like slow grind down without a good shorting opportunity, and then the breakdown, similar as what we have now. But you can then be super pissed if you are not short from this level, or you can just adapt and watch. If I get a redistribution, then I short it, and then I have high time frame targets, and you get much higher RR opportunities along the way. So like here, like if this is your range, this is your deviation, then that's also a reason to look for shorts, which even went over into a model 2 with a sweep right there. And then you can take shorts often with a better RR than having a entry right here as a swing to a target, which is like 4R. Often, if you are jumping in after confirmations, your setup will be even better. So a lot of outcomes, and yeah, like potential shorts. I'm interested in potential shorts if we retest this and show weakness, or if we fall below here and then be more aggressive, because then I don't expect to get that obvious retest, because Bitcoin very rarely gives that obvious retest. But I'm also interested in longs down here, just because a gut feeling tells me we could still get a move up. But yeah, all dependent on how we move. Right now, this is vertical going down. I never like to long that. What I want to see is maybe if I want to long, like if we break lower, then I'm fully into shorts or looking for shorts. But let's say we spike higher here, then often you get a retrace, and then on that retrace, I will be looking for longs, because I think nobody's looking for longs right here. And then look what happens from that zone right there. So I'm gonna put some alerts on my chart, just slightly below here. What are the weekend lows? So these are the weekend lows. It's also always interesting level. We are currently in some demand. If we retrace into this range, then we can watch for the POC as reversal, which is right here. We also broke this view up, so it's looking pretty bearish. But yeah, it all depends on how to execute it. So for now it looks like a pretty big Bart, with this being his head and then breakdown. So let's see. Want to long Tao. Yeah, Tao. Yeah, thing is, like, you broke down Tao and you have supply right there. You now have also bearish structure. It's basically low, lower, high, lower, low, lower, high, low, low. So then this is your structure. So you can watch what happens there. But given the length of the range and your tab 1 here, tab 2, then these two tabs probably merge. So then watch this as tab 2. And you always want to have like your tab 3. Are we within the range? Yeah. Price needs to hold here. If you break lower, then it's very likely that this is just a range breakdown. But if it holds around here, then it's likely to see like push up. And then you can watch for like the model 2. Like that. And then preferably you have that clean return to zone. So I think it can take, there's no hurry to get into longs, for me personally at least. Because this move down is too vertical. So often then it needs time to resolve. So I'm keeping an eye on it, but put an alert, but not forcing it. And it will be super dependent on BTC, if BTC can hold around here or not. But as always, I will update it all in the Discord. Do I have it open? No. Let's watch the low time frame. If we have, like, let's see. Like, since the start of the uptrend, you see that open interest added, and now it's declining. So a lot of positions are closing out. Yeah, it needs time, but I'm still a little optimistic that we can bounce back up, but we will see. Everyone's shorting people. Yeah, that's also what I feel, and it's like everyone is accepting a nuke straight down all the way to the range low, and that was absolutely not the case last time when we had this PO3. This is where everyone literally was screaming that we would go to like 110k and stuff. And then you have sentiment and your range and everything aligning. And right now this is almost a replica, but almost too good of a replica. And everyone is now expecting the breakdown, which makes me doubt it a little bit more. But we'll have to see. Also, the thing is, like, if we break lower, then you can always look for the low time frame shorts. And maybe we get even a retrace into here, and that's like super clean. And if I miss out, yeah, I don't care. I prefer the lower time frame trades a lot more as well. Before I close it off, or people ask me a question right now. Otherwise, I'm gonna close it off because this is just going down vertical. But I want to quickly look at stocks. Are they also selling off? Yeah, so this is around the mid-range of this range, range low, range high, mid-range. And then we had basically local uptrend right here, higher low, higher high, higher low, sweep of the high, which means your low is a weak target low and then a break of structure. But you always should be like, you can draw structure in a range, but it's also important to know where you are in the range, because right now we are at the mid-range, and that's a level where you very often see your structure flip against you and then again against you, basically because in a range price goes sideways. So then it's typical for price to break up and down. So this is not, yeah, this is just neutral to me, not super bullish, not super bearish, just neutral. And quickly gold, because we have been looking at it the whole week for that model 1 to play out. Right here, 1, 2, 3, with then this being like step 4, taking out extreme liquidity. And then it took a long time before it finally took out the range low. But eventually you see that patience pays off, and it definitely took out the target because it made a huge drop lower. So then you have to zoom out. And now this is just the range I'm looking at, with range low, range high, range low, mid range. Then this is super clean demand, weak demand, and also 4-hour demand, I believe. And then here we have super clean supply. So then this is basically your main POIs. And then internally, this is just like the downtrend. So for me, there's not much to do right now until we get a new local range. And let's see what yeah, you see that price is starting to build the value in the middle of the range. So I will not be surprised if this is the long range for a long time, where price now deviated above the value area high. Maybe we do the same right here, below the value area low into demand, and then just range in the middle, which will give a lot of good trading opportunities for us. But right now it's a bit too vertical, so then I just wait for either a super clean POI to be hit, which is this demand below, or for a new range to be formed. Also now, this was our range before it broke down. So this can be range, initiation, if we come back, mitigation, continuation. So then we can draw like a volume profile from start of the range till breakdown. Then this is the point of control. So get an alert there. It's already broke down deep, but like if you get and move into it, then you can look for the potential short for the continuation. But price already made like a big move down, so I doubt it gives like a fee and then does that. But always something to keep in mind. And on the higher time frame, it's probably some supply, yes. So this is now also range supply. That's also why it's called range supply, because price ranges create supply. So now if you retrace into it, it's a supply range. So POI alert in that supply, in demand, and then just waiting. And for BTC, yeah, just waiting what it was. ETH is already breaking into the range high, typical scam moves. And this is gonna be super interesting. Basically from here till here, it's nothing but liquidity. But above that we have a few demands. But if you see like ETH is literally such a shitcoin. Hype. And yeah. So let's see what we get. FOMC like 4 hours or so, I think. So levels are clear. This is the last level to reverse from, around 70k. This is major supply. PO3 or like the Model 1 technically confirmed. However, not a easy short trigger for me in this zone, but we can always jump into later. So just have to see, and main advice to not do anything stupid with FOMC, because as always, if it's obvious, it is obvious. And right now, you can think, okay, I need to be in a short if this reverses, but yeah, like, are you gonna short it or here, stop there, and then target all the way down? Like, if you, it can definitely be like a setup. However, what often happens is that price then comes back up, and then you see a tree drive into supply, and then you think, oh shit, that's obvious, and then you are already in a trade. So oftentimes it's better to just wait till you have an obvious setup, which will always come. Maybe it comes after here, and then we get like a local range with the tree drive, but then I short that heavily, which stop above here, and then you also have like then you often have like a better setup than having that very first trigger. So we will see what happens, but definitely interesting. Yeah, everyone, welcome. Tomorrow I will be live again. Then we have some more clarity what will happen. And I see you guys all in the Discord as always. So cheers, happy trading. Good luck with the FOMC, and don't do anything stupid. Cheers.